Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. The death toll from the coronavirus now stands at 490, with the total confirmed cases heading towards the 25,000 mark. The tax department clarifies on the budget proposal of 10% TDS on mutual funds, says that the tax will only apply on dividend payments and not on redemptions from mutual funds. Bharti Airtel's losses narrow in the third quarter. Average revenue per user improves while its African unit grows in double digits. Cipla is likely to report a healthy third quarter with high-value products in the US driving its operational performance. And the Indian men's under-19 cricket team enters the final of the ICC Cricket World Cup, having beaten Pakistan by 10 wickets in the semi-finals. Let's talk about the US markets now. They continue to rebound from Friday's coronavirus sell-off. Benchmark indices ended sharply higher on Tuesday, with the Dow Jones and the S&P 500 notching up gains of close to 1.5%. The Nasdaq outperformed for the second day in a row, aided by a surge in shares of Tesla. Renita Young of Bloomberg News wraps up the trading action on Wall Street in this report.
U.S. stocks closed higher on Tuesday, and the S&P 500 saw its best two-day advance since October, all happening as investors become increasingly confident that the global economy can indeed handle the fallout from the deadly coronavirus. Now, during the session, we saw quite a few movers, the U.S. gaming industry among some of those, shrugging off earlier Macau's government closing its own casinos for about 15 days while China contains the coronavirus. This initially had U.S. gaming stocks lower in pre-market trading, but they ended a little bit higher. During the session, we also saw Tesla advance for another day and Google owner Alphabet lower on worse than expected earnings. Meanwhile, we saw gold lower as well as treasuries plunged during the day. However, crude oil and copper rose. And that's a look at your Wall Street action on Tuesday. In New York, I'm Renita Young for Bloomberg News.
All right, and stocks in the Asia-Pacific region look to be holding on to gains after that relief rally in Wall Street on overnight. Let's go over to Rosalind Chin, who's joining us from Hong Kong with an update. Morning, Ros. What do you have for us?
Well, yes, we are looking at the markets around China, around the region rather, in positive at this moment in time. Most of the major markets actually making gains. Chinese markets just opening, look like they are slightly dipping into negative territory at the open, but by about 0.1% at this moment in time. We shall watch that, of course, to see what developments come out later in the day. Now, we are seeing of course, the number of cases of the coronavirus spread increasing now. China is saying that there are 24,324 cases. Of those, there have been fatalities, 490, so that number creeping ever closer to 500. The World Health Organization is saying, though, that there's not much of a mutation shown yet in the virus or a pandemic, but we are also seeing the number of cases outside of China also increasing. So we've had Japan saying that 10 people on a cruise ship have been confirmed with the coronavirus. We've got 6 new cases in Singapore, and South Korea has also reported 2 cases. So while the markets do seem to be, investors seem to be a little bit more hopeful that maybe this virus can be somewhat, I'm not going to say under control, but there is hope for this, to control the virus coming up in the future. There are, of course, still many risks remaining. The MSCI Asia Pacific Index is up by about 1/3 of 1% right now. Nikkei up by 0.7. Topics up by about the same amount. Hang Seng Index making gains of about 1/10 of 1% at this moment in time. The World Health Organization also has put together a draft plan, and they say that the key public health responses will be costing about an estimate of about $656 million in the coming months. Back to you.
Ros, the spreading virus is also taking more corporate victims. Companies like Nike and Hyundai are among the latest companies that have been impacted. What can you tell us about that?
Yes, well, Hyundai's been saying that it's had to halt production of its cars because there are components which are unavailable due to a factory shutdown in China. It makes a wiring component in a factory in China where a worker was found to have had the coronavirus, and therefore that factory was shut down. Therefore, it has impacted, Hyundai's supply chain and left Hyundai short of that particular part. It's also affected Nike, which has said that it's closing temporarily about half its stores in China, and that's due to the coronavirus, and also expecting reduced traffic and seeing reduced traffic in the remaining stores. It did say it can have a material impact. The coronavirus will have a material impact on its China sales. Elsewhere, we're seeing Disney, of course. It's had to shut its Shanghai and also Hong Kong Disneyland amusement parks, and it's seeing a hit there as well. It says that the coronavirus in Shanghai alone could cause a profit impact of about $135 million this quarter. In Hong Kong, a little bit less than that. That's assuming that they're closing for 2 months. And for example, airlines, Cathay Pacific, Jefferies has cut its earnings and price target for Cathay, saying that it expects losses now for the second half of 2019 and also the first half of 2020, partly because of those coronavirus issues impacting demand, passenger demand in terms of transit for Cathay Pacific is a major factor, and that of course will be impacted by passengers not going in and out of China or Hong Kong as much as previous. So all these companies and many more starting to see hits from the coronavirus, and we're expecting of course many more companies to be coming out and as the issue spreads and continues in the coming weeks, to see how their profit outlooks may be impacted by this as well. Back to you.
Thanks so much for that, Rosalind. Now, we were talking about the US markets and how they were up overnight in a relief rally, but the stock that has been shining bright, has been the star of the show this week, has been Tesla. And it so happens that the Tesla stock has gained now significantly at 120% in the year so far, and it happens to have a market cap now of more than General Motors, Fiat Chrysler and Volkswagen put together. What's working in the company's favor? Well, Dana Hull of Bloomberg News has the details.
We're all waiting for is more details from the 13F. So today we learned, for example, that the Saudi Public Investment Fund cut its stake in Tesla in the last quarter, which raises the question, okay, well, who's buying? Bailey Gifford, which is Tesla's largest shareholder after Musk himself, raised their stake, but other large investors must be buying in. I mean, this can't just be retail.
Is some of this a function of short squeezes as well, Dana?
There's certainly short covering. I think it's up for debate whether it's really a squeeze or not. But I mean, the short interest in the stock is still very high, and so there's definitely covering going on.
But these parabolic moves never end well, do they? Is there going to be a reckoning coming?
You know, it's hard to say. I mean, I feel like we're not going to get any. I mean, the next sort of big news that we're going to get is in early April when Tesla announces first quarter deliveries. And the company did sort of guide on its earnings call that the first quarter is likely to be soft because of seasonality. This has historically been the case. But I mean, everything's kind of been breaking their way, and there's a lot of excitement. At the same time, you're seeing companies like Ford report worse than expected earnings. So it's almost like, the companies have switched places in some ways in terms of expectations.
Remind us again about big catalysts for this company. They've moved up Model Y production by 6 months. What else can we expect to see that could be a significant change coming for the company?
Sure. So you could see rating agencies kind of move on the debt. There's going to be a battery day for investors in April where Tesla's going to talk about their advantages in batteries, which, to be clear, seems to be a pretty significant advantage. They've been working on electric vehicle batteries for quite some time. They acquired Maxwell Technologies last year. We've never really gotten under the hood with Tesla to hear why they made that acquisition and what advantages it brings. And the other thing is that Panasonic reported yesterday that this Gigafactory in Nevada is finally profitable, which was a big catalyst for the move yesterday.
All right, now let's turn to what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
OPEC and its independent allies have spoken to China about the coronavirus and its impact on demand for energy. The cartel met for emergency talks in Vienna with a senior Chinese diplomat who was invited. Crude has slumped on signs that consumption in China has fallen by 3 million barrels a day. That's about 20%. OPEC Plus did not discuss deeper cuts to output, but will revisit the idea later on Wednesday. Meanwhile, initial results have finally been announced in the Iowa caucus, although the final numbers are not yet available. The first readings for this primary for the presidency put Pete Buttigieg in front, with Bernie Sanders a close second, Elizabeth Warren is in third, and Joe Biden, who has widely been viewed as a frontrunner, in distant fourth. The Democrats admit issues with the declaration, but insist the final numbers will be accurate. Again, these numbers are only partial. President Trump is expected to ignore his impeachment trial when he delivers the State of the Union address later, and instead, he is expected to make his case for re-election. He will likely take credit for the strong U.S. economy, newly signed trade deals, and the crackdown on immigration. The president plans to deliver what he calls a positive speech to an audience that will likely include as many as 5 of his potential rivals for the job of president. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, well, let's turn to India now and look at how we're panning out for trade today. Agam Vakil is joining me to tell you all about that and also to tell you what's happening in the futures and options space. Agam, yesterday was quite the rally for the Indian equity markets after that stupendous fall on Saturday. How are we looking at the start today?
Well, Alex, you know, we've mostly covered a majority of those losses that we saw on Saturday. And, well, today we're going to have to watch about how things develop because we are looking at some strength across the globe for now. The Asian indices certainly looking up. But the SGX Nifty is looking at a decline. Well, we're going to have to see how things shape up eventually. Well, not everyone is confident of the Nifty reclaiming 12,000 at this point in time just yet. That said, we still fell short of that mark for now, even though we did advance by around 2.3%. And, well, the strength was there for everyone to see in the mid-cap and the small-cap indices too. It was the benchmarks essentially which did the best, however, and a lot of strength coming in your private sector banks, not as much for the PSU banks. In terms of ADRs for now, again, we're seeing gains in Vedanta and ICICI Bank along with HDFC Bank. And we will be watching out for something like a Dr. Reddy's and Wipro too. So strength seen across. But what about fund flows? Well, FIs have turned net buyers on a day where we did see the indices move higher. Can we expect this trend to now build on the kind of moves that we've seen? Let's wait and watch. DI is also buying stock worth 602 odd crores. Do remember, DIs have been supporting the markets over the past couple of days in terms of volatility. Let's move on and talk about your contributors. And again, largely coming back on the back of HDFC Bank, along with the HDFC Twins. Reliance Industries giving that support as well, one of the heavier weighted companies. And of course, the others also contributed to about 150 odd points to the gains of an overall 272 points. But let's talk about futures and options. And are we seeing that short covering coming through? Yes, we are. There's a decline. There's a further decline of open interest there. And the Nifty futures and the Bank Nifty futures also looking at a 24% decline. So a lot of shorts building into the Bank Nifty have been unwound. Let's wait and watch as to where things go from here on. And eventually, of course, when it comes to the range, now we have the range back between 12,000 and 12,500 based on maximum open interest. Do remember, the Nifty is not above 12,000 just yet. But should we see it, well, 12,000 will very well act as a support for now. And we're seeing a lot of writing around the 11,800, 11,900 puts on expected lines considering the indices moved higher and well above the mark of 11,900. And as far as the VIX is concerned, that fell. In fact, that actually crashed to around 14.4 now from the levels of 17, well above that back on budget day. And in terms of the Nifty put call ratio, that also is higher to around 1.24, back above the mark of 1, and of course away from 0.95. In terms of stocks, watching out for Manappuram Finance, which was under pressure. It's down 6%, but now that the OFS is done, what can we expect? Can we expect it to move up higher? Biocon, Cholamandalam Finance, Balakrishna Industries all looking at some amount of longs building in. Of course, not Biocon. Biocon did see shorts. And to talk about a handful of stocks which saw unwinding, Jubilant Foodworks, ICICI Prudential, and Indian Oil. Jubilant Foodworks, in this case, which has been trading at life highs, saw a bout of longs unwinding. Watch out for that one as well. Well, Alex, it was a very strong day of trade yesterday. We're going to have to see if that strength continues today.
Thanks so much for that, Agam. All right, on to stocks that you have to watch out for in trade today. Agam's taking you through a few already, but there are stocks in the news, and Somit Sarkar has joined me to tell you all about them. Morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with the earnings that came in post-market. Firstly, Bharti Airtel. The results were largely in line with analyst estimates, with ARPU growing compared to last quarter. The India business growth was flat, while the Airtel Africa reported strong performance. And if you see on a bottom line front, the company reported a net loss due to an exceptional item of nearly 1,050 crore rupees due to interest on provisions of license fees and spectrum usage charges. The EBITDA grew because of higher contribution coming in from the Africa business, home broadband, and the enterprise business. TVS Motors, the results were largely in line. Revenues were down 12%, net profit declined by 32%, EBITDA was down 3.3%. There was a margin improvement due to lower raw material cost, while an exceptional loss of 76 crore rupees impacted the net profit number. Tata Global Beverages, the revenues were up 2.6%, net profit was higher by 22%, EBITDA increased by 22%, while volume growth of 5% was seen in the third quarter of financial year 2020. Margins improved due to lower raw material costs and other expenses. Now, the key positive during the quarter was the strong operating margin expansion in the US coffee business, while the key negative during the quarter was weak operating margins in the domestic and the international tea business. Thermax revenues were down 2%, net profit was up 13%, EBITDA increased by 5%, margin increase was due to lower other expenses, while the net profit was higher due to low base because it had an exceptional item last year. Avanti Feeds revenues were up 11%, EBITDA declined by 42%, while the net profit was down 35% compared to last year. Margins came in lower at 6.9% due to higher other expenses and higher raw material cost in the third quarter of financial year 2020. And followed with that, Apollo Pipes revenues were up 15%, net profit increased by 26%, EBITDA was higher by 24%, volume increased by 15% compared to last year, driven by CP, VC, HDP, pipe, and the value-added product segments. Lastly, on the earnings front, CSB Bank net interest income was up 31%. Net profit came in at around 28 crore, as against 0.7 crore reported by the bank last year. Provisions were up 31%, while the asset quality weakened for the bank in the third quarter of financial year 2020. In other stocks to watch, firstly, Sun Pharma, because they have launched Absorica LD capsules in the US market, which is used for treatment of acne. Cadila Healthcare, because they have received 0 observations in the Form 483 from US FDA for its Ahmedabad plant. And lastly, Orissa Mineral Development Corporation, because they have received an extension of mining lease for iron and manganese over an area of 1,277 hectares.
All right, thanks so much for that, Somit. Now, in earnings today, Cipla is going to be in focus. Is expected to report a healthy growth in the December quarter. I'm joined by Darshan Mehta, who tracks this company very closely. Morning, Darshan. How are we looking in terms of Cipla? Healthy numbers?
Yeah, it will be, because first half was weak, and they had said that the recovery in the domestic markets will happen in the second half. So overall, on a top line basis, we are seeing close to a 9% growth that will come in. On a profit basis, it will be close to 30%, and EBITDA up 21%, which means EBITDA margins of close to 20% coming in for Cipla. Now, basically, gross margins we are expecting to be in the range of the guided range of 65 to 66%, and a lot of value-added growth products in the US that will help the US margins grow. Now, as far as the domestic business is concerned, the first half was impacted because of a lot of change in distribution in the trade generics. The management says that everything will normalize and growth will come in the third quarter. So this is an important quarter that we need to watch out for. But overall, we are seeing close to 8 to 10% growth that will come in. On the US business, revenues up 10%. So we are seeing revenues to the tune of $125 to $130 million. Obviously, there were some of the key products like a Walter & Chen that will lead revenues. One of the key products competition has intensified, so there will be issues that will be there, and there were no major launches that was done in the quarter. As far as the emerging markets and some other businesses concerned, we are seeing some bit of moderation that could come in. Pressure on the tender business in South Africa. So South Africa, we are seeing some bit of decline, 8 to 10% decline. On the high base will impact the European business. So we are seeing Europe up only 5%, and emerging markets we are seeing down anywhere between 3 to 5%.
All right, thanks so much for that, Darshan. Now, a few one-offs led to a boost in JSW Energy's bottom line in the third quarter. The company has also completed its debt restructuring with Jayaprakash Power Ventures. Sharad Dubey spoke to the company's MD and CEO Prashant Jain, and here's a slice of that conversation.
Operationally, if you see, our net generation was down by 10%, and primarily that was because of the lower merchant sales as well as lower offtake by the distribution companies. However, our deemed PLF was 72% in the quarter as compared to the year before 75%, and that reflects that because of the long-term PPA portfolio, our performance was quite robust.
Well, speaking of the plants, of your plants and how their operational performance was, the PLF numbers were a bit disappointing. So what was the reason for that?
Can you repeat your question?
The PLF numbers were actually reduced. Yeah. So what was it for?
It was because of two reasons, as I explained, that lower merchant sales, and second was lower offtake by the distribution company. There was a higher back down by the distribution company.
And what about the debt restructuring agreement which you had for Jayaprakash Power Ventures? What's the update on that?
In case of JPVL, there was a 752 crores was total outstanding. Of that, 352 crores was converted into the equity at a carrying value at the time of the conversion was 62 crores. And balance out of 400 crore, 120 crores was converted into a priority debt, and 280 crores was written off by us, against which JPVL has waived off their right on 477 crores of contingent receivables. Of that 477 crores of the contingent receivable by JPVL, we are quite hopeful that we will be able to recover 400 crores. So in all, we will be recovering large part of the receivables from JPVL.
Well, sir, your acquisition plans were there for GMR, Kamlanga, and also for Bharat. So, what is the update on that?
In case of GMR Kamlanga asset, the talks are progressing well, and in fact, it is in the last stage, and we see the visibility that in next couple of weeks' times we will be announcing the share purchase agreement will be signed. And in case of Bharat, the discussions are going on. I mean, the hearing is going on in NCLT. Post we submitted our resolution plan, and earlier we were having a visibility that it may get completed by 31st March, but I feel that it may be June or July sometime this year.
And so what about the receivables, to the company for the discoms? It is, that roughly the amount, stood at almost 1,428 crore rupees in March this year. So how much that amount has inched up?
It's pretty much the same. As we are speaking, it may be a little lower than what it was in 31st March 2019. So we did pretty well as compared to the industry, because as you know that industry is having a overdue amount of close to 90,000 crore. And that is primarily the reason that because our power cost is pretty low. And so we get much better in the merit order dispatch as well as in terms of the receivable. So we are doing pretty good in that.
And in terms of any future plans, to add up, distressed assets, are you looking at any acquisition plans going ahead?
So never say no. We continue to look at various opportunities, and I think there are the two growth opportunities at this point of time we are pursuing in Bharat as well as Kamlanga, and other than that is a greenfield project Kutihar, and we are concentrating at this point of time in building the capability and developing sites for wind and solar. So in due course we will be entering into renewable space, and if we find any good inorganic opportunity, we will certainly look at it.
All right, that's the management of JSW Energy. Let's talk about the stories that you'll find on the website BloombergQuint.com if you were to look right now. The tax department clarified yesterday that mutual funds would only collect 10% TDS for payments in the dividend options of their schemes and not on gains arising from redemption of units. The finance minister, remember, scrapped the dividend distribution tax in her budget on the weekend and announced that dividends would now be taxed in the hands of the holder. Oil declined after an industry report showed that there was a rise in U.S. crude stockpiles. The commodity was already under pressure, remember, with the ongoing spread of the coronavirus and worries about global growth. On Tuesday, Brent crude fell to $53.96 to the barrel. And with that, it's a wrap on this edition of All You Need to Know. But do stay tuned. There's clearly lots to talk about. This is BloombergQuint.